Thinking about VA refinancing, but confused whether to do a cash out or IRRRL? Hi, I'm Annette, your experienced veteran mortgage loan officer, specializing in VA loans. Today, we're breaking down the two types of VA refinancing, cash out and IRRRL. These are completely different products with different purposes, and choosing the wrong one could cost you thousands of dollars. Stay with me for the next few minutes and let's ensure you make the right choice. Let's start with the IRRRL. That stands for Interest Rate Reduction Refinance Loan. Some people call it the VA Streamline because it's the simplest refinance you can do. Here's what IRRRL is designed for. Number one, lower your interest rate. If you have a VA loan at 7% and rates drop to 5.5%, and IRRRL allows you to refinance at the lower rate. Simple as that. Number two, lower your monthly payment. When your rates drop, your payment drops. On a $300,000 loan, going from 7% to 5.5% saves you about $293 per month. That's $3,516 per year back in your pocket. Number three, convert from ARM to fixed. If you have an adjustable rate mortgage and you're worried about future payment increases, IRRRL lets you lock in a fixed rate for the life of the loan. Now, here's why veterans love IRRRL. No appraisal required in most cases. Your home value doesn't matter. If it went down, you can still refinance. If it went up, great, but you don't need to prove it. Minimum documentation. We're talking basic stuff. No tax returns in most cases, no pay stubs in many situations. Your VA loan payment history speaks for itself. Lower funding fee. The VA charges only a 0.5% funding fee for IRRRL, compared with 2.15% or more for other VA loans. On a $300,000 loan, that's $1,500 instead of $6,450. Zero out-of-pocket costs. You can roll all closing costs and the funding fee into your new loan. You literally don't need to bring cash to close. Fast closing. Most IRRRLs close in 21 to 30 days because there's so much less paperwork and verification. The catch? You get no cash out. This is purely about lowering your rate and payment. The new loan amount can only be your current balance plus closing costs. That's it. Now let's talk about VA Cash-Out Refinance. This is a completely different animal. Let's say you brought your home for $300,000 and it's now worth $400,000. You've paid down your loan to $250,000. That means you have $150,000 in equity. A VA Cash-Out Refinance lets you tap into that equity up to 100% of your home's value. Here's what people use cash-out refinancing for. Number one, debt consolidation. Got $30,000 in credit card debt at 22% interest rate? Pull it out of your home equity, pay off those cards, and now that debt is part of your mortgage at 6%. You just save yourself massive interest payments. Number two, home improvements. Need a new roof, kitchen renovation, accessibility modifications? Pull $50,000 out, increase your home's value, and the loan is taxable. Number three, investment opportunities. Some veterans use cash out to buy rental properties, start businesses, or invest in education. You're leveraging your home equity to build wealth. Number four, emergency fund. Life happens. Medical bills, unexpected expenses. Having $20,000 to $50,000 in the bank from a cash out can provide serious peace of mind. But here's what makes cash out more involved. Full appraisal required. The VA needs to know your home's actual value before approving a cash out refinance. This means a home visit, waiting for the report, and you'll need enough equity. Complete income verification. We need your pay stubs, W-2s, and tax returns, the full documentation. The VA wants to make sure you can afford the new, potentially larger loan payment. Higher funding fee, cash out charges, 2.15% if it's your first VA loan, or 3.3% for subsequent use. On $300,000, that's $6,450 to $9,900. It can be used in a loan, but it's still significant. Longer closing time. Due to appraisal and documentation requirements, cash outs typically take 30 to 45 days or longer. And one more thing, your new loan amount will be higher than your current balance because you're taking cash out. Even if you get a lower rate, your payment might actually go up because you're borrowing more. All right, IRRRL is fast, cheap, and simple, but no cash. Cash out is slower, more expensive, and more paperwork, but you get money. Think of it this way. IRRRL is like switching to a better cell phone plan to save money every month. Cash out is like cashing out your retirement funds for a specific purpose. So which one is right for you? Here's your decision framework. Choose VA IRRRL if you only want to lower your rate and payment. You don't need any cash. You want the fastest, simplest process. You have an existing VA loan. You want to convert an ARM to fixed. Choose VA Cash-Out if you need access to cash for specific purposes. You have significant home equity built up. You're okay with a longer, more involved process. You want to consolidate high interest debt. You're refinancing from a non-VA loan into a VA loan. And here's something critical. If you currently have a conventional FHA or USDA loan and want to refinance into a VA loan, you have to do a cash out, even if you don't take cash. That's just how VA classifies it. IRRRL is only for refinancing an existing VA loan. Before we wrap up, let me share 3 mistakes I see veterans make. Mistake number 1, doing a cash out when an IRRRL would work. If you don't actually need cash, don't pay the extra 1.65% to 2.85% in funding fees. Do the cheaper IRRRL instead. I've seen people do a cash out just in case and waste $5,000 in fees they didn't need to pay. Number 2, not considering the break-even point on a cash out. If you're doing a cash out and your payment goes up, calculate how long it takes for your debt savings or investment returns to make up that higher payment. Sometimes it makes sense, sometimes it doesn't. Mistake number 3, thinking you can't do an IRRRL because you refinanced recently. You can refinance with an IRRRL as soon as you've made 6 monthly payments on your current VA loan and have owned the home for at least 210 days. Don't wait if rates drop. Go get those savings. All right, so now you know the difference. IRRRL for payment savings with minimal hassle. Cash out for accessing equity when you need actual money. Here's what to do next. Step number 1, figure out your goal. Do you just want a lower payment? IRRRL. Do you need cash for a specific purpose? Cash out. Write it down. Get clear. Step number 2, check your numbers. I'll put a link in the description to our free VA refinance calculator. Plug in your current loan details and see what your savings would look like with each option. I specialize in VA loans. I can run both scenarios for you, IRRRL and cash out, show you the exact numbers, and help you make the best choice. No pressure, just straight answers. You can call me, text me, or use the link in the description to schedule a free consultation. We'll analyze your specific situation and show you exactly what makes sense. Thanks for watching. If this was helpful, do me a favor. Hit the like button, subscribe to the channel, and drop a comment below telling me which option you're leaning toward and why. I read every comment and I'll answer your questions. I'm here to serve those who served. See you in the next video.